Welcome back to the deep dive. Today, we're digging into a certification that's incredibly relevant right now, especially with how markets are behaving. We're talking about the Financial Risk Manager or FRM certification. It's all about helping you, the professional, navigate uncertainty, spot those hidden dangers, maybe even capitalize on market shifts. And just a quick reminder, here in 1125, we try to decode the world using data, context, and real-world insights, basically cutting through the noise to help you see that bigger picture.
Yeah, and risk, I mean, it's just baked into finance, isn't it? Markets crash, sometimes seemingly out of nowhere. Companies default. Volatility is, well, it's a given. But the FRM, what's really interesting about it is how it trains you not just to react when things go south, but to actually anticipate these things,
Yeah.
to control the impact, and maybe even more importantly, to spot opportunities that, frankly, others might miss, like understanding tail risk, those big unexpected events. The FRM helps you see not just the danger, but sometimes the hidden arbitrage. That's a real differentiator. It's this globally recognized badge,
Yeah.
opens doors. Definitely.
That's a really powerful angle, not just defense, but offense too. Finding opportunity and risk. So, okay, for someone listening who's maybe considering this, what exactly is the FRM about? Why is it such a game changer?
Right. Look, it's more than just a line on your resume. It really signals leadership potential in risk management.
Hmm.
Being a certified FRM means you're the person people turn
Hmm.
to identify risk, measure it, figure out how to mitigate it in this constantly shifting landscape. And its global recognition is key. It doesn't matter if you're in New York, London, Singapore, it carries serious weight. It shifts you from being reactive to proactive, really safeguarding assets, ensuring stability.
Proactive definitely sounds like the goal. Can you maybe paint a clearer picture? What does an FRM do day to day? What's the core purpose, practically speaking?
Sure. So effective financial risk management, it's about mastering skills that go way beyond just passing an exam, right? It's about understanding risks, maybe neutralizing them before they blow up. You learn to navigate market swings with more confidence, spot potential threats quicker, and implement solid strategies to protect assets. This means getting deep into things like risk measurement techniques, basically.
Wow.
How do you actually put a number on potential exposure? And portfolio risk analysis, which is absolutely crucial, understanding how different assets interact. It's not just the sum of the parts. That interaction can hide risks or sometimes offer unexpected protection. The FRM really gets you into that nuance. And naturally, you got to stay on top of emerging risks. It's always evolving.
That level of focus, that specialization sounds really valuable, which I guess brings up a question a lot of listeners might have. How does the FRM compare to other big finance certifications? Like, specifically, how does it stack up against the CFA? Many people know that one.
Yeah, excellent question. It's probably the most common comparison. Think of it like this: specialization versus breadth. The FRM is laser focused, purely risk management, market risk, operational risk, credit risk. That's its world. It's perfect if you're aiming to be a specialist, maybe on a global risk team.
Okay, so FRM is the deep dive specialist. What about the CFA then?
The CFA, it's much broader. The curriculum covers a whole range of things: investment analysis, corporate finance, economics. It's designed more for people looking at roles like financial analyst, portfolio manager, maybe investment banking. It's a wider net. So for you listening, the choice really hinges on where you see your career going. What's your specific ambition?
And it's probably worth mentioning for anyone weighing those options, we've actually covered some of these other certifications in previous deep dives.
We have, yeah. We looked at the CFA, the CPA, the CFP2. You can check those out. And, it's not always an either or thing. Some very ambitious people actually go for both FRM and CFA, talking about a powerhouse resume, right? That combination opens up a huge range of possibilities.
A powerhouse resume, I like the sound of that. Okay, so let's get practical. Someone's decided, yes, FRM is for me. What's the actual path? How do you earn it? Starting with the exams.
Right, the exams. It's a two-level structure. Part one comes first. That's 100 multiple choice questions. It really lays the groundwork, covers foundations of risk management, quantitative analysis, the math bit, financial markets and products, and valuation and risk models. That valuation part is key. Learning how to price complex instruments and, crucially, quantify the risk within them. Super important for managing exposure. Then, after you pass part one, you tackle part two. That's 80 multiple choice questions. And part two gets into the more advanced real-world stuff, applying risk management concepts: credit risk, market risk, operational risk management in practice.
Okay, two tough exams. But it's not just about passing them, is it? What else is required to get fully certified?
Correct. Passing the exams is step one. Step 2 is getting 2 years of relevant work experience. That means working in areas like risk assessment, maybe portfolio management, or dealing with regulatory compliance, something related. It's basically proving you can actually do the job, apply the knowledge in the trenches, as they say, not just understand the theory. One good thing about the FRM, unlike some others, it doesn't technically expire. But, and this is important, you do need to keep learning. You have to earn continuing professional education credits, CPEs, to maintain your expertise and stay current. The field changes fast.
Makes sense. So, okay, someone's ready to commit. Let's unpack the logistics. The when and where for these exams. What are the first practical steps?
So, GRP, that's the Global Association of Risk Professionals, a body that runs the FRM. They announce the exam dates way ahead of time. Usually there are testing windows in the spring and fall for both Part 1 and Part 2. Here's a pro tip. Register early. Seriously. It saves you money on the fees, which we'll get to, but it also helps secure your spot at your preferred testing center. Centers in major hubs, think New York, London, or say FRM Singapore, which is a really popular one in Southeast Asia, they fill up fast. So get in early. And look, life happens. Deferrals are possible if something comes up. But there's always a deadline, a last date to defer, and usually a fee involved. So you need to stay on top of those dates.
Right, deadlines and fees. You mentioned saving money with early registration. Can you break down the costs involved? What's the financial commitment look like?
Sure. So first time you register, there's a one-time enrollment fee. That's $400. Then you have the actual exam fees per part. If you get in during the early registration window, Part 1 is $600 and Part 2 is $800. But if you register later during the standard registration period, those fees jump. Part 1 goes up to $800 and Part 2 goes up to $1,100. So you can see planning ahead isn't just about avoiding stress, it directly saves you significant money. Money you can maybe put towards study materials instead.
That's a pretty clear incentive to plan. Okay, given how demanding this sounds, the preparation must be intense. How do you actually prepare? What's the kind of study time we're talking about?
Oh, preparation is everything. Absolute central. On average, people report spending somewhere between 200 and 300 hours studying for each part. Some even push towards 400 hours. To make that real for you, think about it like this. That's maybe 12 hours a week if you spread it over 6 months. Or, if you've got less time, maybe a more intense 24 hours a week over 3 months. A structured study plan is, well, essential. You can find free planners online, like the one 300 Hours offers, which can be really useful. And definitely plan for some slack. Build in buffer time. Work gets busy. Life happens. It's a marathon, right? Not a sprint. Honestly, those study buddies and taking breaks, they're not just nice to haves, they're crucial for staying sane through the process.
Makes sense. It's a long haul. Beyond just clocking the hours, though, how should someone approach the actual studying? Any strategies to make that time count?
Yeah, good question. Prioritization is really key. We often suggest something called the sandwich method. You alternate between tougher topics or maybe easier ones to keep your momentum going. And critically, focus on the higher weighted topics first. Don't spend equal time on everything. For Part 1, for example, quantitative analysis and valuation of risk models, those are often seen as the hardest, and they each count for 30% of the score. That's huge. Foundations of risk management and financial markets and products are 20% each. Another big tip, don't skip anything. Even if you think you know a topic well, the exam covers the whole curriculum. You can't afford gaps. And here's the real, the secret weapon, honestly. Practice questions. This is non-negotiable. You should aim to dedicate maybe the last 3 or 4 weeks just to doing practice questions under time conditions, like the real exam. Do the questions, check your answers, really understand why you got something wrong, and then do more. Repeat, repeat, repeat. Oh, and one more thing, if you can swing it, taking a week or even 2 off work right before the exam. That could be incredibly helpful. Just that you focus 100% on review and practice.
That focus sounds critical, especially managing the pressure. What about on the actual exam day itself? Any tips for navigating that?
Yeah, exam day strategy is huge. Time management is paramount. You have 4 hours for each part, but you need to stick to your timing per question. That works out to less than 3 minutes per question. If you hit a question and you're just stuck, make your best educated guess, flag it, and move on. You can always come back later if you have time at the end. Don't get bogged down. And just general study advice applies here too. Take regular breaks during your study sessions. Find a study partner if that helps you stay accountable. Track your progress, maybe using tools from providers like Analyst Prep. Create a good study space, schedule breaks, make a formula sheet you review constantly, and maybe test yourself on the learning objectives daily. Just quick recall. It helps solidify everything.
Those are really practical strategies.
Yeah.
Okay, let's talk tools. What specific things give candidates an edge? First up, the calculator. What's allowed and how important is mastering it?
The calculator is, well, it's basically your best friend during the exam. Jury RP is very specific about approved models. It's either the Texas Instruments BA2 Plus or the Hewlett-Packard 12C. That's it. And it's not just about having one. You absolutely must master it. Be comfortable with all the financial functions calculating discounted cash flows, net present value, NPV, internal rate of return, IRR. Speed and accuracy here free up mental energy for the harder conceptual questions.
Okay, master the calculator. Got it. What about study materials? There seem to be a lot of options out there beyond the official books.
Yeah, there are. You've got the official GARP books, which are definitely comprehensive. But honestly, many candidates find third-party prep providers really essential. They can supplement the GARP material or sometimes even replace it, depending on your learning style. Analyst Prep, for instance, they offer a whole package: video lessons, study notes, mock exams, tons of practice questions. They have features like dashboards to track your performance, and they cover other exams too, like CFA, actuarial exams, lifetime access on some packages. And I think there's a discount code, BILLRJEG10 for 10% off. Worth checking out.
Good tip. Are there other major providers people should be aware of? What's the general consensus on them?
Sure. Bionic Turtle is another big name. They have a very strong reputation, often called one of the most reliable, especially for their practice questions. People say their questions are a good gauge of the real exam's difficulty. They also have helpful Excel tutorials. The feedback sometimes notes that maybe some videos feel a bit dated, or there might be small errors in the notes, but generally they teach the critical theory very well. Then there's Kaplan Schweizer, known for having really polished, beautiful notes, as some say. But the flip side of the feedback is that maybe they lack a bit of real depth sometimes, and their Part 2 questions might feel a little easier than the actual exam. But regardless of which provider you choose, or even if you mix and match, the key thing is practice exams. Cannot stress this enough. Aim to take at least 3, maybe even 5 full-length mock exams under strict time conditions, especially in those last few weeks before the real thing. It simulates the pressure, highlights your weak spots like nothing else. Absolutely critical.
Right, simulation is key. So you've put in the hundreds of hours, you've mastered the TIBA-AT+, you've crushed your practice exams. Now it's the big day. What should you expect walking into that test center?
Okay, exam day. Remember the format. Part 1, 100 multiple choice questions. Part 2, 80 multiple choice questions. 4 hours for each part. It's a marathon that tests both your knowledge and how you apply it under pressure, what to bring. Very specific list. Your approved calculator, TIBA2 Plus or HP12C, some 2 pencils, yes, pencils, and your valid government-issued photo ID. Make absolutely sure the name matches your registration exactly, and check that expiration date. Don't get tripped up by that. Basic advice, but important. Try to arrive early, get decent sleep the night before if you can, eat something sensible. Avoid last-minute cramming right before you walk in. And then, after it's all done, you wait. Results usually come out about 6 weeks after the exam window closes. Feels like forever, but yeah, about 6 weeks.
Okay, the waiting game. So assuming you pass, you get the experience, what does this really mean for your career long term? Beyond just having the letters FRM after your name, what skills does it truly hone?
That's the core question, isn't it? Beyond the certification, becoming a successful risk professional involves developing some crucial skills. One big one is really understanding the perspective of the front office, the traders. Why are they pricing things this way? What's the rationale behind the models and trades? You can't just take everything risk-related at face value. You need that commercial understanding. Second, communication. Hugely important. You can have the most sophisticated analysis, but if you can't explain your findings clearly to different people, traders, senior management, regulators, people who might not have your technical background, it's not effective. And finally, especially for more quantitative roles, coding is becoming a big deal. Python, R, maybe data visualization tools like Tableau. Being able to work with data directly makes you a more complete risk professional, though even if you're not coding daily, that strong conceptual understanding the FRM gives you is always the foundation. You know, the financial world never stands still. New risks pop up constantly: geopolitical risk, climate risk, cyber risk, you name it. The FRM gives you a fantastic toolkit, a solid framework to understand and manage these complexities. It sets you up as an expert. But I think true mastery in this field, it really demands a commitment to lifelong learning, constantly adapting. So maybe the final thought for you listening is, how will you take this knowledge, this expertise, and not just navigate the future of finance, but actively help shape it? How do you turn that inherent risk and volatility into something positive, into opportunity?
That is a fantastic question to ponder for your own career path. Thank you so much for breaking all that down for us. A really insightful deep dive into the FRM. We really hope this gave all of you listening a clearer picture of what the FRM entails and why it's so relevant today. If you found this useful, please do give the video a like, share it with colleagues or friends who might be interested, and definitely hit that subscribe button to stay up to date with 1125's data driven insights. Thanks for joining us.